Used cars down month on month, but new cars, as you suspected.
Yeah, Philibert had that yesterday. And I think that there's enough in here to make it so that if the Fed keeps pushing, it will turn. I mean, I don't know why people felt that after he only did a certain amount, that would already send the CPI over. And why I do feel that he was wrong to limit and say not 75. I mean, he could come out today and do 75, and there would be a relief rally.
You're not calling for an intermeeting.
No, I wish he would do that, frankly, because I just think that he has to shake things up. You know, we're very close to pushing over a lot of different things, but they have to be pushed over. And people have to say, all right, the biggest asset that has gone down is the stock market. It's really hurt people. There's a lot of stocks that we thought would have the ability to survive because they had profitability, and it's turning out not to be the case. It's the weakest part of the U.S. economy. Is the stock market. And I think that's actually, unfortunately, positive if you're the Fed. It just has to translate into why did new cars go up? I mean, why didn't people say, you know what, I don't have the money to be able to do it? We have a lot of companies that are falling apart. We have companies that are saying, listen, you know, what people think, we're not going bankrupt. I mean, I don't want to see that. But I don't think that we're that far. I just think that we need a couple more Fed tightenings. And then I think that what's going to happen is you're going to say, well, listen, there's a lot of companies that are very profitable. They've come down a lot, and let's buy them. And everything's been junked up by all these ETFs that have been put together, and the greed of Wall Street that has just made it so that you've got the bad with the good. And I think you're going to have to sit back and say, you know what, there are a lot of companies that came public in the last 18 months that are as worthless as the companies that came public during 1990 to 2000. They have a little more cash. But we're seeing so many companies where you look at 23, 24, 25 numbers, and there's really no hope to profitability. And they do have enough cash to get there. They tend to be name brand companies that you look at them and you say, oh, all brands, look how low that is. I got to buy it. Warby Parker, I got to buy it. And then there's nothing. There's like no raison d'etre. I mean, a lot of companies came public that during this period where it was very forgiving. And that period's over.
Yep.
And I liked that. I mean, that period's over. That's one of the principal sources of inflation was that, you know, like $9 trillion worth of equities. And I don't want people to lose money. But I do know that when you look at something like a Coinbase, it's just terrible. But Gary Gensler told you it was terrible. There's a lot of people, Carl, who told you things were terrible. You know, told you that these coins that were stable coins were terrible. And people just ignored them. I mean, I think that Coinbase is just another asset that is chimerical. I mean, we don't need it.
Coinbase.
Well, I mean, like, look, Coinbase, they've been belligerent the whole way down. They've been belligerent, angry at their critics, but the critic is the commission. And I said over and over again, you can never criticize the commission. You may hate the commission, but the commission runs. I mean, look, Elon Musk hates the commission, but he's never done the things that Coinbase has done.
There's a look at coin this morning below 55. David, a lot of it's also getting the analysts to admit to their prior mistakes. I mentioned last night Piper in January named coin a top pick with a target of 440. It looks a lot harder to get to now.
Yeah, 440 would be a good distance from here, I think, guys. You know, as you know, I have a keen sense for the obvious. And yeah, that would be a lot of points.